So we're back again, Matt Piepenburg and myself, for another MAMChat. Things are certainly happening in the market, and there's a lot to talk about. So today we're obviously going to talk a bit about the silver pricing and what's happening in that market, Matt. But also, we're going to talk about inflation, deflation, because that's going to be so important for coming years. I mean, I've always believed that eventually we will have hyperinflation because of collapsing currencies. That's always what happens when the currency collapses, and I think that's what we're going to get. And after that, we might even have a deflationary implosion. Of course, now, but we won't have only inflation or hyperinflation, because in certain areas we will have inflation, and others we will have deflation. All the asset bubble areas will be deflation, of course. So I'd like to understand your take on how you see this inflation-deflation debate, Matt.
Yeah, we talked about this months back, Egon, in the summer. It was kind of the trying to solve or conclude the inflation-deflation debate in 5 minutes is challenging, but there are deflation arguments that are valid, and there are certainly inflation arguments that are certainly valid as well. So I think the three main points on the deflation camp, which you have to give credibility to, is ultimately when you have massive amounts of global debt and massive low levels of low GDP. Right now at 280 trillion in global debt, GDP is less than a third of that. So you have a very slow growth environment. Where there's a slow growth environment, that's obviously a tailwind for the deflationary camp. GDP is 1/3 of global debt. So that's an issue. And of course, you also have a trend now in the pandemic or post-pandemic or current pandemic scenario where you've got consumers getting hit very hard. The argument made by the fancy lads is that consumers are saving. I'd say consumers are tapped out. Millions and millions of them are unemployed or on the dole, so to speak. So not only are they saving, they're simply not spending. So when consumers are not spending, consumers are 70% of GDP. If they're not spending, the velocity of money slows down. So that's another deflationary argument, which we're seeing playing out in real time right now. The other big argument, which is valid by the deflationary camp, which we've talked about, is there's this massive amount of money printing, but that money printing, a lot of that created currency is going straight into the risk assets like stocks and bonds. So that's being contained into negative yielding bonds that are overbought and high P multiple stocks that are vastly overbought and vastly in bubble territory. The other area, and people have talked about this, that a lot of this new currency is being, especially with the US dollar, a lot of that is being absorbed by the repo markets or the euro dollar market. So it's not circulating in the Main Street economy. And therefore, you're not getting that velocity of money, hence more deflation. And those are all valid arguments, and then it would explain the deflation we've been going through. But that doesn't mean that inflation has been outlawed. By no means does that mean that. And I think the three strongest arguments on the inflationary trend and the inflationary camp are equally valid and more pressing. I think you have to begin with the very fact that certainly in the US, but globally too, the CPI scale that measures inflation, I've often joked, is about as bogus as a 42nd Street Rolex. The methodologies used to measure inflation by the CPI, if you use the methodologies used in the 1980s, and not the tweaked methodologies that re-weight pricing, we'd actually have 10% inflation right now. That's not a tinfoil hatted conspiracy theory, that's just a fact. So we are seeing real inflation. This is not being reported accurately, and there are all kinds of implications behind that. The other thing is there have been price inflation on the supply chain with COVID, and of course with the pre-COVID Trump trade war. There was supply chain disruptions and trade balances that were affecting the prices on the supply chain coming out of China. COVID's made that worse, so there's price inflation on that supply chain, and that of course can have an inflationary tailwind. If we see a vaccine solution to this pent-up demand in the COVID crisis, that could push more velocity. That could be inflationary. I think the real issue, though, comes back to the central banks and the Fed in particular, but all the major central banks, the ECB and the Bank of Japan in particular. They're printing trillions and trillions of dollars at record pace now since just the last year. Why isn't that inflationary? People say, again, it's contained, but I don't think it's contained. As an article I wrote recently last week about David Hume, the Fed is no longer the lender of last resort, it's becoming the spender. And the Fed is now using Fed money to make direct purchases into ETFs and into particular bond names. And eventually, I think the Fed will be buying stocks, just like the Bank of Japan. So when that Federal Reserve or central bank becomes a spender rather than a lender, that too increases the velocity of money, ultimately leading to a more inflationary backdrop. And of course, we know that inflation is a good setting for precious metals. But keep in mind that last year, when gold hit record highs or hit new highs, that was in a deflationary backdrop. So when you add an inflationary tailwind coming, that of course is very good for precious metals. But the central banks know this. The real issue why gold is able to reach such highs last year in a deflationary backdrop was because people are more and more aware of the debasement of their currencies. The debasement of their currencies is a big issue. And of course, the central banks and the bullion banks that they serve know this. And there's been a massive effort to try and hide the elephant in the room about currency debasement. And they certainly don't want to see gold hit or silver hit record or new highs, because that's proof positive of the failed monetary experiment. And so there's an effort, a sustained effort, deliberate effort in the futures market or in the pricing market of paper gold and silver to put a permanent short on silver or gold in the COMEX trade, to basically put a ceiling on the price of those precious metals, which we know is highly distortive of actual price discovery. Which brings me to my question to you, Egon. You know, we've seen this Reddit trade of the silver squeeze and all these other things going on, but we know the COMEX and futures market and the volume of actual paper gold versus physical gold or silver is completely distorted. I'd love to get your comments. I'm sure others are interested in this distorted price discovery in a very distorted futures market or paper market.
Yeah. Well, first of all, as you said, the precious metals are revealing the deceitful actions of the central banks and of governments. But people never see it in the currency. You know, nobody sees the fact that the dollar, for example, has lost 97% of its value since 1971 in the last 50 years, since Nixon abolished the gold backing of the dollar. You know, that's because they measure it in dollars, and they don't see how their dollar is being devalued all the time. And of course, even in this century, in the last 20 years, the dollar has lost against gold, which is real purchasing power, stable purchasing power. Lost about 85%. So the currency is falling. Nobody is aware of it because they think that the dollar is still a dollar, which it isn't at all. And of course, we're seeing how these the central banks and the BIS, which is the central bank of the central bankers, how they're constantly manipulating these markets. The BIS actually can. There are swaps in the precious metals markets taking place every day, and the volume, especially in London, between the LBMA banks in precious metals or in gold, if we take, is something like 70 trillion against annual production of gold, let's say, of 200 billion. So, you're talking about incredible distortion here. And these swaps are basically, they're juggling with swaps in order to suppress the price. So the BIS can create gold and silver with the swaps, and then they allocate paper gold or silver to the bullion banks, and the bullion banks kind of keep that outside of their balance sheet and use that to leverage to trade in more gold contracts or more swaps, etc. And that's what's happening in this market, and that's what's holding the price down. Of course, there is never, ever any transparency. BIS, they are totally immune. Everybody who works there is immune for life. So they can never be investigated. And we know GATA was the organization that is trying to get price discovery into the metals and try to take these things to Senate hearings and to court, etc. They never get anywhere. There's always stopped. So therefore, and we saw now an example in the last week, which a lot of people have followed, whereby after the temporarily successful attack on GameStop by these small traders, Reddit traders, and Wall Street bets, they're called. And they actually, because of the massive shorts in one stock, they managed to attack that market and take it up, from nothing to several $100s. And hedge funds lost billions. And then now the stock, they didn't manage to hold the positions, and the stock is back down again. And of course, the market talked about doing the same in silver. And there was great excitement on Friday. Will they do it in silver? And I said, sure, that would be exciting. But the fact that they have against them the BIS, the Bank of International Settlement, the central banks, and the bullion bank, that is unlimited firepower. They can create as much money or as much gold or silver as they want to counter any attack. So taking on that cartel, if you want, here in the silver market, which is a very small market, obviously, that was bound to fail. Nevertheless, that was a bit of, we got the speculative price move. I don't think there was a real attack. And that lasted for, silver went up more than 10% and is now down most of that.
Yeah.
But, therefore, we've seen attacks on the silver price. We talked about that before, and gold. Mm-hmm. Early morning in European times when they're attacking it, when there's no buyer and one seller that sells a major amount, like we saw in silver, 1.4 million, in gold, 1.4 million ounces we saw a few weeks ago, and there was just one trade selling 1.4 million, no buyer, and of course that no sane trader would ever do that if you wanted to keep his job. So that's what's happening short term. But Matt, we are in this for the long term. We observe these things. We observe the fact that there is a lot of fake trading and manipulation. And of course, when you have massive paper contract against you that they can issue in an unlimited way, then of course it's very hard in the short term to break it. At the same time, Matt, we're looking at, just take the last 20 years, we look at the gold price, we look at the silver price, but they've gone up dramatically. And in between, there are big corrections. We are not in this for sure. I'm so surprised every time when we see this price move, and we see it in our company too, a lot of people want to buy then gold or silver. You should, if you're in it for the long term and for wealth preservation purposes, first of all, you should buy low and sell high. I mean, that's the key. But also, it doesn't really matter at what level you buy if you're not unlucky to buy at a major top, temporary top. Otherwise, it doesn't matter because, if you're in it for wealth preservation purposes, central banks are best friends and governments are even better friends because they continue to create deficits year in, year out, which actually then debases the currency, and gold and silver will always reflect that. So that's really what long-term investors should think about. They should not think about making money on gold and silver short-term and trying to beat the to beat the shorts and or the hedge funds or the bullion bank. Just think about buying physical, put it away. I mean, that's the only policy that any long-term investor should have. And it's such a wonderful game. As you know, we advised our clients in 2002 to go into gold in a major way and some silver. And of course, that was at level of at $300 and silver was $4 something. Yeah. So, it's a fantastic ride. And the ride has just started. Yeah. And again, it's not a ride to make money, but you will make money. It's also a ride to the most important is the insurance aspect, protecting your assets, because at some point we will get this massive readjustment of currencies, and therefore gold and silver will reflect that and at levels that no one can imagine today. And so I think you and I know that we shouldn't worry about the manipulation, although it's amusing to follow, of course.
It is. It is nice. It's nice to see the natives getting restless and more informed. The modern pitchfork is now a Robinhood app and trying to squeeze out these big mean banks and hedge funds. But even the larger uninformed masses are more and more aware now of the currency debasement. And like a cork, the truth and natural price discovery and natural market forces ultimately rise to the surface. We're fighting, as you said, a pretty well-armed army at the BIS and the bullion banks and the central banks. But more and more investors are aware that the currency debasement and the manipulation of the price is unacceptable, and that's going to crack at some point. But as you said, it's not a price trade game; it's a wealth preservation game. It's a store of value game, which we've known for decades.
Yeah. I mean, the only benefit, Matt, of this attention that now silver has had in the last few days, the only attention is that it can actually act as a catalyst. People become now aware, number one, of the danger of holding paper contracts in gold or in silver. When you have a market in paper, which is many hundred times bigger than the real market and many hundred times bigger than the physical market, so that therefore means you can never get delivery. I mean, the gross outstanding silver contracts on COMEX. They're talking about 400 million ounces short gross.
Yeah.
But that's $11 billion. You're talking, and that's 400 million ounces, about 12,000 tons, I think. And the annual production of silver is 26,000 tons.
Yeah.
So it's a bit, so the gross outstanding is just under half of the annual production. That's why, the market will fail at some point, and it's not when everybody expects it. It will just happen out of the blue. So hang on to your gold and silver, hold your physical, and then enjoy life, because that's what it's all about.
Precisely.